So anyways, what we're going to do today, and why I do have these monthly investment seminars, is to educate everybody. There's never any services ever being sold at any of my seminars, and we do have an investment team that we use personally, okay, that we recommend. So if you're ever looking for, and they'll introduce themselves later, but if you're ever looking for, you know, a CPA or a mortgage banker or security or anything like that, these are people that I truly trust, and they're here, and they also do speak as well throughout. So what we try to do every month is we try to have, Jason will talk a little bit just about investing, and then we have 2 speakers every month. So this month we have self-directed IRA and 1031 exchange. Next month it'll be insurance and also an attorney, and she's really good. So anyways, every month we have different speakers. It's always the second Tuesday of the month, okay? So anyways, let's get started. This is Jason Kotar. He's originally from Florida and recently moved back to Florida from Arizona to work on the Kristin Stampini team as a buyer's agent and on the property management team. We started property management at the beginning of January to offer to all of our clients, okay? In Arizona, Jason had his real estate license and worked in residential property management. Previously, Jason was a real estate trainer, speaker, and author on various aspects of the real estate industry. And if we could all please welcome Jason Kotar.
Thank you for coming tonight. I'm going to give you kind of a snapshot of some of the proven models that we believe in, also an idea of where the housing market is here in Palm Beach County. I won't keep your time. We're going to get to the good guys a little bit later. Let me kind of give you an idea as far as what we do here, our mission, the Kristin Stampini team, and why we have these investor seminars. The part that I like is at the very end. It says we want somebody that says they're glad they did it instead of they wish they had. The idea behind the seminars is, once again, is to educate, to put the power of education in your hands so that you can go ahead and make the decision once you're fully informed. That's what we're looking for. What are we going to cover today? A couple of things. One, we're going to talk about the stability of real estate. Home prices have home purchases have nearly doubled since 2007. Also, cash flow opportunity. We have a really good mortgage professional here. If you ever have any questions regarding cash flow, etc., on different properties, I would recommend speaking to him. But 32% of Americans depend on real estate investors to provide them leases. So there is an avenue for you in the economy today as a real estate investor. And then also we're going to talk about real estate as it compares to stock market, mutual funds. We're going to go ahead and show you some slides, the way things have changed in the last 10 years. These are some nice statistics to kind of give you an idea of what real estate means to the economy. $6.3 trillion of household wealth is within home equity, and roughly 42% of family assets are real estate assets. So that gives you an idea of what the housing market and real estate means to the stability and the growth of our economy. I work essentially with buyers, as Kristin mentioned. I work with a lot of investors. And when I say a lot of investors, probably of 10 phone calls I get, I'd probably say about 7 or 8 of them are investors. And so I get a lot of the same questions, and when we're done today, obviously feel free to talk to myself or anybody on the Kristin Stampini team. And one of the things I try to tell people is you don't have to be wealthy to be a real estate investor. You just have to be educated. And that's hopefully part of the reason why you're here today. Statistics-wise, in 2009, the median income for investors was $87,000. You don't have to make over $100,000 a year. Nothing about real estate investing says you have to be wealthy or rich. You don't. Let's talk about the proven models over trial and error. The best way to kind of help you out with this is people tend to predict their success based off of their natural abilities. I've done that a lot in my life. I said, well, I'll go as far as I can go. Well, what you tend to realize is that success, previous success, has left clues. That there are models out there that lead. There's a pathway to excellence. And so you can only go so far. As you can see here, your natural ceiling of achievement, you can only go so far on your own. What we believe is the power of proven models. That if you follow, once again, success has already happened before you. You're not the first one trying to succeed in real estate investing. Follow the models of the previous people that have been successful. That's what we believe in, and we're going to go into that right now. We have what we call the triangle. The first thing is criteria. When I speak to an investor for the first time on the phone, I tell Kristin this all the time. Tell me a little bit about what are you looking to invest in? Well, properties. I say, good, that's great. I'm happy that you want to invest in properties. Can you narrow down your criteria? Well, I'm not really sure. I'm thinking maybe some single-family homes or some condos. And so as we go for the conversation, I'd like to get them into the office, because what I'd like to do is I really want to explain to them that in today's market, it's important as a real estate investor to find your niche. Find your criteria. Are you looking for single-family homes? What type of bedrooms, baths? What kind of roofs, flooring? Are you a condo or townhomes? You know, they have HOAs. Are you looking to, there's rental restrictions, pet restrictions. These are the type of things as an investor, I want to make sure we're on the same page. So the criteria is the filter that leaves in the good and excludes the bad. So then we talk about criteria, I want to know exactly what you're looking for, and I urge you, as a current investor or a potential investor, to narrow down what it is that you're looking for. The second theme are the terms. How much money are you putting down? Are you getting financing? How are you going to do it? Your negotiation skills oftentimes will lead to the highest yield. So not only do you have to identify the properties, but you also have to understand the terms of how you're going to turn said property into a potential investment. This is the most important thing, and this is partly why we decided, or Kristin decided, to set up this real estate investing network, is to let everybody understand that you don't have to do it by yourself. That we encourage you to build what's called a dream team. If you look at the proven successes of other investors, they don't just do it themselves. They have a CPA. They have a home inspector. They have an insurance guy or a gal. They have those people in place to help them make the decisions. They have a self-directed IRA. Making sure you have your dream team of people in place is the only way to do it. I'll take that back. That's the way we prefer to do it. It's not the only way. That's our proven model. So when you put these things together, the criteria, what are you buying? How specific are you? The terms, do you have your financing in place? Do you understand what your return on your investment is? What are you looking for? What is your long-term intent on buying this property? And the third thing is the network. How are you going to do it? Who's going to help you? Who's going to mentor you? Or are you going to be a mentor for somebody else? You don't have to do it by yourself. And this, like I said, this is why Kristin decided to do this, is because we want to help you, if you so choose, help us as well. Help build your wealth through investing, real estate investing, but by doing it not by yourself, but through a team. What are some of the things about real estate investing that make it so good? A couple of things: it's improvable. You can do work on it. Deductible, depreciable, deferrable. Obviously, you have an accountant, talk to them, see what the benefits are. Stable, slow to rise, slow to fall. We're going to go in and we're going to see some statistics regarding the stock market, so you can kind of see the volatility versus the housing market. And it's livable. You can live in it if you want. I don't know if you can live in a stock. I mean, you can try. And this is one of the things we kind of just talk about. Like I said, we got a great certified public accountant here. It's some of the things that can deduct on an investment property. So just make some mental notes. Like I said, if you're in the seminar today, you'd like to talk to Mike. These are some of the things to think about when, once again, when you're building your team of investors, your success, your network, your dream team. Understand everything. Don't try and say, well, I think I can do this. No. Ask the questions. They'll be able to tell you. Let's talk about real estate versus mutual funds and stocks. Mutual funds, oftentimes they underperform. And in the last 10 years, there's been an average 3.66% return on your investment. And one of the things different from real estate is it's managed by somebody else. The dividends are typically reinvested. In real estate, you can do it yourself. Obviously, you have your team of people, but when you do your homework, you put your dream team together, you know through your experience, your education, that you've been able to, you have something that's a little bit more tangible. Now let's look at the S&P. This is from 1969, so you can see the volatility in the S&P over the last 40 years. The highs, the lows. In one of those years, they had a negative depreciation of 38%. Stocks, stock market, all over the place. Not bad, but not what the opportunities allow you in real estate. Let me read you a quote. I don't know if you folks are like me, I love to read. I read this from the Consumerism Commentary. It's a website I go to a lot and read. This was an article on February 6th. He He says you can make money in real estate. You can make more money in real estate than the stock market if you do more than buy a house, live in it, and sell it later. Any sort of activity that might create profit, like flipping properties for a quick gain or looking for tenants to manage, introduces risk. On the other side of the coin, you can earn nothing in the stock market by buying at the wrong time, trading frequently, or following hot trends. There are an infinite number of variables to get in the way of achieving the long-term averages calculated by the fact that 2020, hindsight's 2020. So when we talk about real estate, it's not about following, oh, this person says, Kramer, whomever it is on CNN says we should buy this stock, or CNBC. That's not what we're talking about. We're talking about working with the right team of people, doing your homework, and making an investment based off of your experience, your education, your dream team of people. If you're able to do that, it's a little bit different than just playing the hot hand and saying, okay, let's just go ahead and invest here. So that's what real estate does for you. As you can see, if you look at the statistics of real estate over the last 40 years, the worst we had was negative 13% in depreciation, but as you can see, for 30 some odd years, real estate was always in the positive. Projections. Where are things going? Real estate to projections through the next 2020, as you see, we had a little dip there. We had a nice rise. But if you can see where projections are going, I don't think anybody can really for sure tell you where the stock market's going. They don't know. We're hoping with projections tell you, typically if you just analyze real estate over the last 40 years, this is what you're looking at in return over the next, 2012? The next 8 years. What about Palm Beach County? We're looking at 2007 to 2011. Just in the last year, from 2010 to 2011, home sales have increased 23%. Closed sales. Palm Beach County pending sales, from 2000 in 2011, they were up 36%. We just got the statistics for January, and that number, if you go January of 2011 to January 2012, pending sales are up over 50%. Inventory. Inventory has come way down. I'm sure some of you have heard the term seller's market, buyer's market. Seller's market, obviously, is that there's not as many homes for sale, that there are a lot of buyers. Buyer's market, obviously, is just the difference. Where we're headed right now is into what we call a seller's market. As you can see, the days on the market have come down. In 1 year, they've gone down 6.5%. We have the numbers here of inventory. From January 2011, 2012 is down 36%. The inventory, monthly supply of inventory, we were at 14.2 months at the end of January of 2011. Now we're at 6.8 months. The average market is around 5 to 7%. So for you investors, word to the wise, when you call, and I hopefully talk to you, Kristin, any investor will tell you, in this market right now, you have to have your dream team in place, because the chances of that property sticking around, if you aren't on your game and ready to buy at that point, you're not going to get the property. We do a lot of REOs, Mark does those, and we'll tell you, a lot of the REOs that we have right now are going for list price and above. The last 10 sales that Kristin had, the last 10 sales, all sold for list price or above. So, as an investor, are you ready to move now? And that's one of the things I'll talk to you when I sit down with you. Are you a cash buyer? Okay, do we have our proof of funds? Are we an investor? Do we have our financing in place? Is your terms, your criteria, is everything ready to go? Because if it is, you need to be ready to act right then and there. Sometimes I'll get a phone call. I had a phone call just the other day. We had a property listed in REO. It was a month and a half ago, and a guy just found it online. And so I talked to him and I explained to him that property within the first 2 days had 25 showings. You know why? Because the property was priced right. So I brought him in. Well, he's on his way in. I'll be able to sit down with him, go through the projections, tell him where everything's headed, so he understands, as an investor, in today's market, homes that are priced right do not sit around very long. So what we do is we encourage you, as an investor, we encourage you to sit down with us, go over the market, understand, build your dream team, and be ready to act. Because if you're not ready to act, the chances of that property being on the market are slim to none.
Great. Thank you, Jason.